Hello and welcome to another trades and tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I'm going to take a look at some tactics for kind of getting your way into a breakout trade without paying the high of the day. And it's kind of a follow-up on some trades we looked at in a webinar last night. So if you were in that webinar, yeah, these are the ones we were talking about, and this is how I actually got into one of the trades today. So before I get to the details of this, if you're watching this on YouTube, make sure you subscribe to our channel, and also make sure you check out trades and our tutorial section at marketgauge.com. And finally, make sure that you check the high definition setting at the bottom right hand corner of this video so you can see it nice and clearly. I think you'll like it a lot better. All right, so we're looking at Boyd Gaming here, and I know it's all scrunched up and you can't really see the individual days, but I did that because I wanted to highlight the fact that this is a daily chart. And the question here for a swing trader is whether or not this is a breakout we should follow. And if we are going to follow it and it starts to kind of turn over, how do we know if that turnover is really going to turn into an ugly collapse or it's a pullback to buy? Now, let's just start with the fact that the focus here is just a breakout. And that's the question is, do we want to follow the breakout or not? Now, I also said that in last night's webinar, I talked about Boyd and the fact that it looked good, and the basic idea of the trade would be if it breaks out, you want to follow it, and in terms of a stop, the stop would be down under this consolidation. Now there are ways you can put a stop in the middle of the consolidation if you want to cut it tighter, or the other idea that I talked about was because it's so strong, it would also be a candidate for looking for an opportunity to buy it at the bottom of the range. But this video is about what do you do when you have a big move up and you're worried about the move continuing, but you don't want to pay way up. How can you kind of finesse your way in with a tighter stop? Now, to put a little backdrop on this, these indicators that you're looking down here are the triple play indicators. If you're in the video, if you were in the webinar, you know what I'm talking about. If you're not in the webinar, I'll give you just a quick heads up. Obviously, I can't teach you the whole thing in 2 minutes here, but essentially, the blue line up at the top one is a price leadership line. If the blue line is over the red line, that's a good thing, right? So the blue line, you want to see that over the red. Even better if you've got the red and the blue over the black. And so that means that your leadership momentum is all going higher. And the bottom one here is a measure of volume leadership. And so it's interpreted the same way. The blue over the red means you're in good shape. And when you want to find breakouts that have the highest probability of continuing, then you want these things in alignment. And Boyd's been a really good example of that. As you can see, if you looked at Boyd's consolidation in here, and this breakout had a really nice pattern here too. These things were already really well in gear. And the other thing that you can see from the volume and this price action is really this thing when it turned, and this does not happen with every stock, all of a sudden it was in gear on both. So it's no accident that I'm picking Boyd. It's no accident that I picked Boyd to focus on as one of the stocks in the webinar, because it had everything lined up really nicely. And therefore, that's why, as I said in the beginning of this video, it's actually one I got into today. So one of the patterns that I look for, and this is going to pull on a couple of different things I've talked about in these free videos. So if it's a lot, well, just keep watching the free videos. You'll get to it. You'll get the hang of it. So one of the things when you break out, you can look intraday for a correction to the breakout level, and one of those breakout levels is the high of that breakout bar. Now the other level that is worth watching is the floor trader pivot, and then in this case it's probably going to be right around the middle of this bar, so we didn't get down to that. So let's just quickly look at how it worked out today. Now I'm looking at a swing trade, looking to get in or start to get in with relatively tight stop. And here is, so I'm just going to get rid of the floor trader pivots for a second. And so here's a 5-minute chart. All right, let's keep this really simple. And you can see that I have the luxury here for demo purposes of having previous day's high labeled. So here's the first 5-minute opening range. If you watch any of our stuff, there's the first 5-minute opening range. Here's the 30-minute opening range, and I focus on 30-minute opening range reversals. And this is the same idea. If you get a reversal at the previous day's high, after you've had a nice breakout above it, I was just waiting for it to come back and give me a reversal pattern at the previous day's high. And it did it twice. It did it once here and followed through, and then it did it here and followed through. So I actually got in on the follow through right here, and I had a tight stop right here, figuring, you know what, if this thing doesn't go today, then I'll get out and take another look. And the idea here is if I'm getting in around 15.15 and my stop is under 14.90, then I've got a, what's that, a 25-cent risk. Now that 25-cent risk, and I see the upside, if I go back to the daily chart, over time, I mean, even if I just look at this consolidation of 50 cents, that's twice what I'm risking. But really, I see this consolidation. Sorry for the slowness. Right, we're breaking out of consolidation here that is well over $1 in its range. And as I started the video, this breakout here of the whole chart, right, is a massive, massive breakout if it's going to continue. And so the triple play indicators are pointing to the fact that it's definitely in gear and looking like this could be a good launching point. And then I use those intraday tactics and those key daily levels to get my stop really tight. Like I said, in the case where it's already started to rocket up. And I've also got a stop area that would be about $1 if I wanted to be a little bit more, give it a little bit more leeway. All right, so I hope that makes sense, and I'll show you a quick example of another one also today. This is another one we talked about in the webinar. So it was HCA. Now HCA had a similar problem in that if you didn't catch it yesterday on the open, which really would have looked good, with the triple play, everything's in gear. I didn't catch it on the open. But what am I going to do? I'm going to look for the areas that it could retrace back to. So one of them would be the high of the breakout day if it keeps going. But in the webinar, I said, we're probably better off trying to look for a retracement back to this level, right? These highs right in here. It's not magic. I've talked about this in other free webinar videos. You look for these prior highs. Once you break out, look for it to retrace right back down to it, and that's exactly what it did. But it did something else today. In addition, remember I said to look at the floor trader pivot, another area for a place to look for a correction back down to. So here's your opening range low, 30-minute opening range low, and so we would look for a reversal back into that area, and that reversal pattern, that higher candle close reversal pattern right here, where the market closes above the high of the prior bar. I had a whole webinar on that earlier, so I can't go into that right now, but it is that straightforward, higher close than the prior bar, and you look for that coming back into the opening range, and you look for it in a good spot. Right. Well, the good spot here is that I've got the triple play indicators telling me that this breakout should have legs, so I look to buy it on a pullback. And as I said earlier, another place to look for the markets to reverse is that floor trader pivot number. So the floor trader pivot, high, low, close divided by 3, standard calculation, is this yellow line. All right, so when you see a situation where you pull back, you hold the floor trader pivot, then you have an opening range reversal pattern in here, and you're looking at a triple play trade for a bigger move higher, now you can talk about buying this thing right around this level with a stop under the low of the day as a quick, let's see if it works trade, and if it keeps going, I'll hold it. And or even a day trade, right? But that's how the whole thing sets up. The one thing you do want to be careful when you're buying below the previous day's high is if it rolls over without taking out that previous day high, you really want to get out of the way down at the low of the day, because once it should hold the high of the day. As you see, this is a classic pattern. Comes down, tests the high of the day, rallies. Once it breaks the high of the day, previous high of the day, rallies back up, and then has trouble getting through it. All right, that is a classic pattern. Happens all the time, and so when it rolls over, very often that means this high, it's done. It needs to sell off more. And so this is especially true after these big moves that we just had in a lot of stocks the other day. So a lot of things in this video. Sorry it's so long, but again, just to quickly review. Number one, if you have a really big up day and you know that you've got momentum, one of the ways that you can buy the pullback is to look for the floor trader pivot. If the momentum continues, look for the opening range to line up with that previous day's high. The best times to do this is when you've got the 2 triple play indicators telling you that the momentum is likely to continue, and you can keep your stop tight if you want to keep it tight because it just had a big up move, as opposed to putting it at the bottom of the consolidation. So hope that helps, and I'll see you in the next video.